Lesson 4, How to Trade with Leverage. If you were to trade in small quantities, for example €1 at a time, you would never make any profit. That's why in the Forex, market currencies come in lots. 1,000 units form one micro lot, 10,000 units will form one mini lot, and 100,000 units will form one standard lot. Right now you're probably thinking, I don't have that kind of money. Does that mean I shouldn't be trading? This is where leverage comes in. Forex brokers offer up to 500 to 1 leverage. That means that to open a one standard lot position, you need only to have about $300 in your account. Let's take a look at this example. Exchange rates for the euro to dollar is 1.3. You have your margin set at 0.2%. You decide to buy one standard lot, so you're buying 100,000 euros, which is worth $130,000. As your current margin is 0.2%, your broker sets aside $260 from your account. While this is considered to be a down payment, you will have to borrow the rest of the money to open a position. Of course, after you close your position, the money is returned to you along with your profit or your loss for this particular trade. Just remember, high leverage means you're also susceptible to large losses as well as gains.